Tuning in. I see some people have just started in the chat. I think we're all set to get started. Hey, everyone. I hope you're having a good Wednesday morning so far. Everyone in the chat, hey, say hey. It's good to see you. That's awesome. So today we're going to take a listen in on the release of the monetary policy report that comes out every 3 months from the Bank of Canada. And this has implications on a bunch of different things across Canada, right? Has implications on the current housing crisis that's going on. In my eyes, the affordability, sort of the surge of prices that has been happening over the past little while. Also, it has implications on what the government can do with its spending in the future, right? A lot of these decisions impact what interest rates are. And Chrystia Freeland, with the most recent budget, came out and said, hey, the reason we can afford this is because interest rates are so low. But now it seems like that might not be the case for so long. Yeah. Hey, it's nice to see everyone. I see Stacy. I see Melissa. Stacy's from Nelson. Yathu's from Toronto. It's good to see you guys. Welcome back to the stream. So I'm going to pull up this what's going on here. And let's get this up on stream. So you can see here, this is what I'm waiting on here. This is the Bank of Canada. They're going to do their live stream, and we're going to sort of react to it here. And we're going to sort of break it down and tell you what it actually means for you. Alex, I'm in Toronto. Well, I'm not in Toronto. I'm about like 35 minutes, 40 minutes east of Toronto. Let me just get everything set up here for the stream. Beautiful. Yeah, I'm from the Toronto area. I'm in the Durham region, like 30 minutes, 40 minutes east of Toronto. That's where I live, but I lived in Toronto for years. Yeah. All right. So now that we've got this all set, I want to show you so they've just released their monetary policy report, and they're about to sort of talk on it and answer questions to reporters. I'm guessing Tiff Macklem, the guy you probably saw in this thumbnail, Tiff Macklem's going to do a speech here in a few moments talking about what's going on, why they've made the decisions they have, and what that's going to mean for Canada going forward into the future. But before that gets started, let's flip up here, because they actually did release their policy a little bit early, so we can get a little sneak peek here. Actually, let me make sure this is okay. Yeah, I'm gonna put that on my other tab so I can make sure we don't miss it. Okay, and yeah, so this is the Bank of Canada's monetary policy report. They come out with it every 3 months as an sort of outlook of what's going on in Canada when it comes to monetary policy. The Bank of Canada largely controls what interest rates are in the country through the different programs that they have. So this is going to impact that on a big level. And they do have some key takeaways here. So let's read what their key takeaways are before this speech gets started, so we can actually know the context of what they're saying. So let's just read through this together. The Canadian economy. I'll zoom in a little bit so you can have a better view of that.
We will read some opening remarks.
Never
and then
mind.
we'll go,
I'm hearing this
Go ahead, Governor.
get started on the stream. So I guess
thank you,
hear
Louise,
it from
and
the
good
horse's
morning.
mouth.
And thank you all for joining us to discuss today's policy decision and our monetary policy report. My message today is twofold. First, the economic outlook has improved, and Governing Council is more confident in the resilience of the economy to the pandemic.
Oh, that's going to be
Canadian households and businesses are adapting to the virus, finding new ways to shop, serve customers, and work remotely. More important still, the rollout of vaccines is progressing, and we expect better times ahead. But second, most of Canada is now dealing with more contagious variants of the virus. La troisième vague a créé de nouvelles incertitudes et pèse sur les réseaux de la santé dans certaines régions. Cela va ralentir le retour au travail de nombreux travailleurs à faible revenu, les jeunes, les femmes, qui gagnent leur vie dans les secteurs où la distanciation est difficile. Ces secteurs ont été parmi les plus touchés par les pertes d'emploi durant la pandémie. Trop de Canadiennes et Canadiens sont toujours sans emploi.
My French isn't that great, but I'm
Il
trying to
reste
listen
une grande marge
and
de
make what
capacité
what he's saying.
excédentaire dans l'économie. I understand how difficult this third wave is for Canadians hoping to return to work and for businesses struggling to cope with new restrictions. I know the toll has been immense, and this latest wave is tough. You can be sure the Bank of Canada will continue to support Canadians and the Canadian economy through the full length of this recovery. Before I turn to the Governing Council's policy discussions, let me say a word about the format of the Monetary Policy Report. You'll notice two new boxes, boxes 2 and 3, that review changes to the global and Canadian economic outlooks. We added these boxes to enhance the transparency of our analysis and to more clearly explain our forecast changes. We intend to make these regular features of the Monetary Policy Report, so we look forward to your feedback to this innovation. Let me now turn to the Governing Council's deliberations. We spent a lot of time talking about incoming data. The first quarter is looking like it was considerably stronger than we were expecting back in January. Cette croissance est due en partie au contexte plus favorable à
So the
l'échelle
fact that
mondiale.
he's saying that it was stronger than expected means that there could be some interest rate changes coming sooner than later. Previously, at one of these previous meetings, I'm just pausing to make sure still French. So at one of these previous announcements, the monetary policy reports, they came out and said, hey, we're going to keep interest rates super low until like 2023.
The most important factor in
But
the
that might
unexpected
change.
economic strength has been the resilience and adaptability of Canadian households and businesses. Lockdowns through the second wave had much less economic impact than they did through the first wave. And as restrictions were eased, the economy bounced back quickly with substantial job gains in February and March. The third wave is a new setback, and we can expect some of the job gains we've seen get reversed. But the performance of the economy in recent months has increased our confidence in the underlying strength of the recovery. Comme la vaccination avance, nous nous attendons à une forte croissance.
So the
menée par
messaging
la
here is that
consommation
it seems like they're a lot more confident in Canada's response.
Les mesures de
So they
relance
might
budgétaire
lower or
adoptées par les
raise
gouvernements
interest rates slowly here. It seems like, and from what I read just before this, from their monetary report, that they might slow down their quantitative easing program or their government bond buying program. It's subsidizing the Canadian government as well as keeping interest rates low. I think they're going to taper that back. Previously, at the beginning of the pandemic, they were buying $5 billion worth of Canadian government bonds, and then they scaled it back to 4. But now I think they're going to scale it back to 3.
Plus généralisé. Globalement, nous nous attendons
still
maintenant
French.
à ce que l'économie croisse d'environ 6,5% cette année. Ensuite, la croissance va ralentir à peu près 3,75% en 2022 et 3,25% en 2023. You won't be surprised to hear that we also spent time discussing what's happening in the housing market.
Okay, here's
The
some
pandemic has
interesting-
led to some unique
on housing,
circumstances.
okay.
With so many households working and studying at home, we see many people wanting more space. And interest rates have been unusually low, making borrowing more affordable. While the resulting house price increases are rooted in fundamentals, we are seeing signs of extrapolative expectations and speculative behavior. Given
Speculative.
elevated levels of household debt and the risks that households may overstretch in the face of rising housing prices, we welcome the recent proposal by the Superintendent of Financial Institutions to introduce a fixed floor to the minimum qualifying rate for uninsured mortgages. New measures just announced in the federal budget will also be helpful.
I'm
We're
skeptical
watching
of that.
developments in the housing market very closely, and we'll have more to say on this in our financial system review in May. The Governing Council also spent time
gonna say
discussing
more on housing in
estimates
May?
of the amount of slack in the economy
really
and
not a
the
lot on
outlook
housing.
for potential growth. While the economy, with the economy proving more resilient to the pandemic and vaccines rolling out, we are hopeful that there will be less labor market scarring and less lost capacity than we earlier feared. Bankruptcies have been low, and surveys of investment intentions, including our own Business Outlook survey, both suggest that many companies are speeding up investments in digital technologies. These factors are reflected in our decision to raise our estimate of the economy's potential output. But it bears stressing that considerable uncertainty surrounds our estimates of potential output. We have never seen a recession or a recovery like this one. The pandemic continues to have widely different impacts across sectors, businesses, and groups of workers. Further economic restrictions have affected both demand and supply, and this is making it more difficult to interpret economic signals. This all means that as the recovery continues, we will be paying attention to a broad spectrum of indicators of slack, including a range of labor market indicators. Bien sûr, nous avons aussi parlé des perspectives d'inflation. Nous savons qu'au cours des prochains mois, l'inflation va augmenter en raison des effets de glissement annuel. Ces effets montrent simplement l'incidence, un an plus tard, de la chute de certains prix au début de la pandémie. Mis ensemble avec une nouvelle hausse des prix de l'essence, l'inflation devrait monter temporairement autour de la limite supérieure de la...
It sounds like what he's saying here is that comparing year over year inflation rates, we're going to see a higher inflation rate when you're comparing it to like the low inflation that we saw at the beginning of the pandemic to this year's slightly higher inflation. It's going to make the change look bigger. So it sounds like he's saying that they're expecting to see higher inflation in the data coming up here. This is something that people are very concerned about because of all the money printing and all of the spending that's been going on by the government. People are worried that inflation, potentially hyperinflation, come into play. But then other people say, hey, we're not even seeing the 2% inflation in the CPI that the Bank of Canada uses as its target. So this is important and interesting stuff to monitor.
Taking into account the improved economic outlook and the considerable slack that remains, Governing Council judged that the recovery still needs extraordinary support from monetary policy. We remain committed to holding the interest rate at the effective lower bound until economic slack is absorbed so that the 2% inflation target is sustainably achieved. Based on the bank's latest projection, this is now expected to happen sometime in the second half of 2022. In the current context, though, there is considerable uncertainty about the timing, particularly in light of the complexities involved in assessing supply and demand that I mentioned earlier. Our forward guidance continues to be reinforced and supplemented by our quantitative easing, or QE, program. We decided to adjust the program to a target of $3 billion weekly net purchases of Government of Canada bonds. That's down from a minimum of $4 billion per week, while we will be maintaining broadly the same maturity composition of our purchases.
We'll get into the significance of all this soon.
Of the incremental stimulus being added each week is consistent with the progress toward economic recovery that we've already seen. Looking ahead, further adjustments in the pace of net purchases will be guided by our ongoing assessment of the strength and durability of the economic recovery. If the recovery evolves in line or stronger than our latest projection, the economy won't need as much QE stimulus over time. Further adjustments to our QE stimulus will be gradual, and we will be deliberate both in our assessment of incoming data and our communication of our analysis. Nous sommes déterminés à procurer le niveau de détente monétaire.
We're hearing that they're lowering their quantitative easing program to buying only $3 billion worth of bonds. Only $3 billion, right? This sounds silly to say.
Monetary policy stimulus
back to English
to support the recovery and achieve our inflation target. And with that, let me stop and turn to your questions. Thank you.
Okay, we're going to get into that. Let's just talk for 1 second about what was just said before we get into these questions so we can have a better idea of the significance of what's behind these questions, right? So we heard a couple different things, very little on housing in that initial speech. He says that he's welcoming of the OFSI changes, the Office of the Superintendent. That's the governing body that regulates big financial institutions. And what they've proposed, I believe just last week, and I made a video on it, I think if you want to check it out, it's called the government's finally, or they're finally stepping in and regulating the housing market, something like that. But essentially what I say in that video is that they came out and said that they're going to increase the mortgage stress test. The mortgage stress test is what people use to, when you go to buy a home and get a mortgage, you actually have to qualify for a higher interest rate than the one you're actually getting to make sure that if interest rates go up, you're not going to fall behind on payments. You're going to still be able to afford it. Now, they chose to increase that close to 0.5% in what you have to qualify for. As a result, that close to 0.5%, and this results in around 5% change in buying power. So if, as an example, if someone was going to buy $1 million home, which is like an average in many markets across the country now, it's wild. But if someone was to buy a house for $1 million before with the previous, they'd qualify for that $1 million. Well, now they'd qualify for $950,000, right? That little change there in purchasing power, and they're setting a hard deadline for it of June when this is going to come into place. Many people think that that's just going to cause the housing market to go even a little bit more crazy because everyone now has a deadline. And if you have a deadline where all of a sudden you're not going to be able to afford as much, what are you going to do if you're a buyer? You're going to try even harder to buy right now before that change comes into place, right? And then you get more FOMO, you get more running up of the housing market. This is what I think is going to happen. I don't really think that the OFC changes are really going to do all that much, but it seems like both Chrystia Freeland said in her press conference a couple days ago that they're really relying on the OFC changes. Tiff Macklem here, the governor of the Bank of Canada, is saying, hey, we're really encouraged by the OFC changes, but I just don't buy that it's going to do anything to slow down the market right now. I really don't. With interest rates as low as they are now, he has said that they're planning on raising interest rates in the future. And for the housing market, that could mean a slight slowdown, right? For every percent, I believe there's a rule of thumb, like for every percent of increase in interest rates, the buying power that people have goes down 10%. So I really believe that these interest rates and the Bank of Canada's quantitative easing program, which allows them to control these interest rates, those are going to be the largest effectors of the real estate market going forward. That's my personal thesis. I don't really see the OFC changes having that much of an effect. Let's get into some of these questions, and we'll get into some more analysis soon.
Thank you, Governor. We'll do one question and one follow-up in this first round. When you do ask your question, please state your name and affiliation. I do want to remind people to mute their line if they're not asking a question. You can do so by pressing *6 and unmute by pressing *6 again. Avant de poser une question, veuillez vous identifier. Libre à vous de poser vos questions dans la langue officielle de votre choix. Pour mettre votre ligne en mode discrétion, appuyez sur l'étoile 6. Pour l'enlever, faites étoile 6 encore une fois. The first reporter in the queue is Julie Gordon from Reuters, and she'll be followed by Mark Rendell and Shelley Hagan. Go ahead, Julie.
Thank you, Louise. Hi, Governor. Julie Gordon from Reuters here. I'm just wondering, the NPR has included an impact of $85 billion in stimulus. That's actually come in at just over $101 billion, with nearly half of that front-loaded into the current fiscal year. How much will that impact your forecasts?
Well, good morning, Julie. We completed our projection before the budget, and so we had to make some assumptions. So the assumption that we put in our projection was $85 billion of new federal stimulus. That was the midpoint of the $70 to $100 billion range in the fall economic statement. What I would say is that, so obviously the budget has come out. There's roughly $100 billion of stimulus. Having said that, our projection at a macro level really captures the fiscal stimulus that has been announced both by provincial governments and to a large degree the federal government. Keep in mind that the difference between 85 and 100 is obviously 15 billion. That's spread out over 3 years. That's not a very big number. The other thing I would stress is that a number of the budget provisions are extended supports for workers, for households, for businesses, for renters. And that's a provision in the budget. How much actually gets spent will depend on the outturn for the economy. If the economy recovers well, people will be getting back to work, and all those supports will not be needed. On the other hand, if the economy turns out to be weaker, those supports the money will be spent. Those supports will be very important. The other thing I'd stress is that in assessing the macro impact of the budget, you have to look at the composition of the spending. And there are a number of initiatives or elements in the budget that will stimulate supply as much as demand. National daycare being an obvious example, but there are also others. There are some initiatives to accelerate investments in digital technologies by small and medium-sized companies. There are investments in education. Those will stimulate demand and supply together, and so the impact they'll have, by expanding both the supply capacity and demand, they'll have less impact on the inflation forecast. So, as I said, I'm confident that our projections really capture the broad brush of the fiscal stimulus in provincial and federal budgets.
Interesting point there. So he's saying the spending that's been announced by the Liberal government in this in the recent budget, the one that was released on Monday that we've been covering here on the channel. Well, he's saying that we shouldn't be worried about that causing any sort of inflation in the market, because many of the credits and many of the benefits in the programs, he mentioned the digital the benefits for certain businesses and for green businesses. I think they're allowing certain businesses to write off around $1.5 million as a max for investments in digital and green tech. So what he's saying is that while that may, the spending in the budget may give people more money to spend on things, increase demand, at the same time, they're also giving benefits in programs to people that will also result in an increased supply. So if demand and supply go up at the same time, well, then prices shouldn't really change all that much in his eye. Of course, there's huge questions around what the indicators that he's using to determine CPI or determine inflation. He's using CPI. Lots of people aren't really happy that that's the main thing that's being used, because we see these run up in real estate prices and in other assets. We're seeing big time asset inflation because of the quantitative easing program, and we can get into that a little bit more. And I'm seeing lots of people in the chat. Yeah, Candace says, thanks for tuning in again, Candace, a constant viewer, along with Shane too, and Toronto Yeller. I love seeing you guys in here. The government prints more money and it's called stimulus. I print extra money and they call it counterfeiting. That's a good one. Yeah, interesting stuff in here. Yeah, I saw some stuff from saying that it's going to be challenging for millennials and people younger even to get into the housing market. I definitely think it's more challenging than it used to be. I think it is still doable. It really comes down to lowering your expenses as much as you possibly can, increasing your income as much as you can. I recommend house hacking as a way to, even rent hacking, to save up more money to get a down payment, because it's challenging right now, and certainly investing along the way to build up your down payment.
Yes. Thank you, Governor. And for my follow-up, can you give us an update on where things stand with your research into a central bank-backed digital currency? Do you expect to launch a pilot this year?
Well, thank you for that question. Tim Lane gave an important speech on this about a month ago, where he really laid out how our thinking and how our work is evolving. There's no question. The pandemic has had many consequences. One of those is it's accelerating the digital economy, and in that context, a digital currency, the case for a digital currency, becomes more compelling. We have not taken any decision. Ultimately, it's a decision of the Minister of Finance if we were to have a digital currency. But we are certainly accelerating our work to make sure that we would be in a position if that was something that was needed and beneficial in Canada.
Thank you. The next question is from Mark Rendell, Globe and Mail. Go ahead, Mark.
Hi, Governor Macklem. Can you hear me?
Yes, Mark, go ahead.
Perfect. Thanks for taking my question. When you're speaking about the evolution of slack in the economy, it mentions looking at a broad spectrum of indicators and various measures of labor market conditions. What exactly are we talking about there, and what, measures will you be looking at to measure that slack?
Well, it's hard to give you a long list, Mark. I think what we wanted to convey is that there is an unusual amount of uncertainty. In this outlook, we revised up our estimates of potential output. In the darkest days of the crisis, we pulled them down quite a bit. But with the economy proving more resilient, we're hopeful there'll be less labor market scarring. And with the recovery proceeding better than expected, we're starting to see more signs that firms are turning to investment. So we know there's going to be some destruction of capacity from this crisis, particularly in the hardest hit sectors. But at the same time, we're seeing more investments in digital. We're seeing accelerated investments in digital technologies that will be adding to capacity. So, and we revised up our estimate of potential output. It's still a percentage point below where we had it before the pandemic. There's a lot of uncertainty. It's particularly hard to assess. It's always hard to assess the supply capacity of the economy. It's particularly hard in the current juncture where you're seeing, a recession and recovery like we've never experienced before, and where both demand and supply are getting affected. So it's more difficult to interpret our usual economic indicators. So with that in mind, we will be looking at a broader set of measures of capacity and slack in the economy. That includes a broad range of labor market indicators, as we've highlighted on a number of occasions. This pandemic is having very uneven effects on different parts of the labor market, particularly affecting low-wage workers, women, and youth. And so we will be looking at a broader set of indicators. We're looking for a complete recovery, and that's going to take some time. We will be assessing these various measures of slack on an ongoing basis as we move forward.
Great. Just for a follow-up question on quantitative easing, I noticed the language has changed. It no longer says the QE program will continue until the recovery is well underway. Does that mean you now assume the recovery is well underway? And what does that mean for the timing for the additional, tapering of the additional $3 billion?
Well, I think it means what it says. Today we took the decision to adjust our quantitative easing program to a target of $3 billion a week. And I want to stress that the decision to adjust the program reflected what we've seen in the economy to date. The economy has recovered better than expected. As I highlighted, the households and businesses have been impressively resilient to this second wave. The recovery has proceeded better than expected, and with that better than expected recovery easing program will reflect our assessment of the strength of the recovery and its durability.
Thanks. The next question is from Shelley Hagan of Bloomberg, and she will be followed by Tony Mace, and Greg Quinn. Go ahead, Shelley.
Hi, Governor Macklem. I wanted to ask about more details on the tapering of the QE program. So you said the main reason was because of the economic recovery. Was there any technical reasons for reducing stimulus in regards to having too much of a share of the outstanding bond market? And then as well, what parts of the yield curve will the purchases be reduced?
Well, in the first part of your question, Shelley, the decision to adjust our QE program really reflects our assessment of how much quantitative easing stimulus the economy needs. And as I just outlined, it really reflects the progress in the recovery that we've already seen. With respect to your second question, the new target, $3 billion a week, down from the previous minimum of $4 billion, and we will be maintaining roughly the same composition of purchases across the yield curve.
Camera issues solved. Thanks for bearing with me, guys.
And then when you moved forward your timeline in terms of when you see inflation returning sustainably to 2% and economic slack absorbed, you moved that up to the second half of 2022 from 2023. Does that mean that based on the current outlook, you would see a rate hike in the second half of 2022?
Shelley, let me first of all remind you that our forward guidance is outcome-based. We've indicated for some time that we're going to hold our policy rate at 0.25% until economic slack is absorbed so that our 2% inflation objective is sustainably achieved. That's a commitment not to do something. It's a commitment not to raise interest rates until those conditions are met. What we do when those conditions are met, we will have to assess that at that time. There's nothing mechanical. The other thing I'd stress is that our forward guidance is not calendar-based, it's outcome-based. At the same time, when we provide a forecast, we do indicate what our forward guidance implies relative to that forecast. And today we've revised up our outlook, and with a better outlook, the slack is absorbed sooner. And as we indicated in today's outlook, that happens sometime in the second half of 2022.
I'm seeing some good questions in the chat. We're going to get into some of those questions very soon.
The uncertainty around that. I spoke to that in one of the earlier questions. It really reflects this is a very unique cycle, and that is generating an unusual degree of uncertainty, particularly around assessing the evolution of the economy's supply capacity or potential output. And so, as I indicated previously, we will be looking at a broad spectrum of indicators. That includes a range of labor market indicators in assessing the degree of slack in the economy, and that assessment will be ongoing, and we will be providing our analysis to you. As we've said for some time, we're looking for a complete recovery. We're looking for a full recovery, and we're not going to count our chickens before they've hatched.
So they don't want to be too quick to make the changes.
The next question is from Tony Mace of Mace News.
Hi, Governor. It's Tony Mace here. I'd like to ask about the inflation outlook a little bit. It looks to me from the tables in the monetary policy report as if you are allowing for something of an overshoot of the CPI target going into 2023. To what extent are you looking to make up for the recent undershoot of inflation relative to target? And is this something like flexible average inflation targeting?
Tony,
so significance here, just before we get into that answer, he's saying, in this most recent monetary policy update that they've just put out, well, they're saying, hey, we might see somewhere at the maximum of 3% inflation, again, using the CPI metric that some people believe isn't a good representation of what's actually happening when it comes to inflation. But they're saying, hey, you're going to allow this to go to 3%. Is that are you just making up for the lower inflation that was that we saw last year throughout the pandemic? So that's the basis of this question. So
yes, if you look at I think it's chart 14 in the monetary policy report, there is a graph that gives our inflation forecast, and as you indicated, inflation does go a little bit above 2% in the later parts of the projection into 2023. And that's really a consequence of our forward guidance. We've indicated we are going to hold our policy rate at the effective lower bound until slack is absorbed. And the consequence of that is that you're likely to get a bit inflation rising a little above 2%. After that, we have a band. We have a band of 1% to 3%, and it makes it. We put in place that exceptional forward guidance because we were in a situation where we had a huge amount of excess supply in the economy. Inflation was zero. In fact, it was negative for a little while, and our real concern was that inflation would be well below target. Even a concern of deflation. So to really try and get the economy recovering as quickly as possible and get inflation back as quickly as possible against that background, we've provided this exceptional forward guidance. And as I said, a consequence of that is that the forecast is that inflation will likely go a little over 2%. That's part of flexible inflation targeting in a risk management framework where we really wanted the biggest risk was deflation, inflation being too low. We took out some insurance to get it back to target quickly, and the consequence of that is the forecast has a small overshoot.
Thank you. And just to follow up, if I may, please, you made some comments about the housing market earlier and some of the price pressures there. Could you expand on that a little bit more? Are you saying that enough has been done with the recent proposal for more
this is what I was questioning.
Stress tests for borrowers?
Like they're saying this is enough? It seems a little hopeful.
Well, first of all, I want to say that we understand how difficult it is for some Canadians to break into the housing market. And if I need any reminder, I can tell you the correspondences I'm receiving from Canadians highlight the difficulties some Canadians are having in getting the home they are hoping for. With respect to the housing market, I think it's important to first of all reflect on there are many very unique features of the current cycle, and one of them is that we're all working at home.
This is such a
our children are studying at home.
This is going to get me into a rant.
Most of our recreation is at home. People want more space, and they're not commuting to work, and they expect that working arrangements are going to be more flexible going forward. They don't need to be as close to the city center. And so what we're seeing is strong demand for single-family homes, particularly outside of in suburbs and in communities surrounding the larger cities. That's real fundamental demand, and supply is not responding nearly as quickly as demand, and so you're starting to. We've seen rapid price increases. Our concern, our worry is that against a background of rapid price increases, people will extrapolate. They'll expect that those price increases will continue indefinitely, and they'll overstretch to buy houses. That would be a mistake. The proposal by OSFI to revise the B20 guidelines and put in place a minimum floor on the benchmark. That is a helpful proposal, and the reality is when interest rates are unusually low, there is greater potential for them to eventually rise, and so by putting in this minimum, that will help protect borrowers and lenders from overstretching. There's also a measure announced in the federal budget to put a 1% tax on vacant homes owned by foreigners. Again, that will tend to reduce speculation, and to the extent that foreigners are buying homes as an investment, it'll encourage them to rent those out, so that that will contribute to the supply in the market. Those homes are not taken out of the market effectively. So those are helpful measures. What I can tell you is a couple of weeks ago we put out some analysis of the housing market and the associated vulnerabilities. We will be putting out more analysis in our May financial system review.
So they're saying they're going to come out with more guidance on housing in May, so in a month, I guess. That's some interesting stuff. Is essentially saying they're hoping that the off-sea changes that we talked about a little bit earlier on the stream. He's saying that they're hoping that that's going to be enough. Whether or not it is, or that remains to be seen. I don't see it having that big of an effect, especially with the fact that there's a hard deadline. People are going to be running out to buy houses quickly before that deadline comes into place. And also, it's not even 100% that they're going to make these changes. It's likely they will, but they said they're just in consultations about it. So they're saying, he's saying, I can see that people can't get into the housing market here in Canada anymore. It's so challenging. He's saying the reason for that is the urban sprawl, right? People leaving the downtowns and going out to more of these suburbs, causing this massive price increase around. And this has been a large narrative since the beginning of the pandemic. People don't want to be cooped up in towns. They want more space. They want a yard, right? And I believe that narrative was true for a while, and there might be aspects of it that are true now, but I don't think it explains what's going on here. I think the key driver is the extremely low interest rates and the looseness of credit from the big banks and their ability to loan out mortgages, right? I think that that's going to be the real thing that changes the housing market. And the reason the interest rates are so low is because of the Bank of Canada's quantitative easing program, right? I saw people saying in the chat, are you serious? They're buying $3 billion worth of bonds every single week right now. And yes, and that's going to be lower than what it is right now at $4 billion and $5 billion even earlier before they started tapering it, right? That drives down interest rates and increases people investing in things like real estate. They want to buy homes, really cheap money, really low interest rate money means more people want to take out that money and use it to invest and use it to buy homes right now while the getting's good, right? So this has largely stimulated the economy, sure. And the former Bank of Canada governor, Stephen Poloz, actually came out and said that he said what Tiff Macklem doesn't want to say. Right? He came out and said, because he's a former Bank of Canada governor, he can kind of be a little more loose-lipped about what they're thinking. But he said, yeah, we're doing quantitative easing as a way to stimulate the economy, but as a result, we have this runaway housing market. And what Stephen Poloz said was that he's okay with it. He said, I'd rather take a runaway housing market or a surging housing market than a huge recession, right? That's what he's saying, is they're okay with this trade-off. Yeah, housing prices, asset prices are going to inflate dramatically, but we're not going to see as bad of a recession as we may have seen because of this pandemic, and that's the trade-off that they're making with this quantitative easing program. Interesting stuff.
Next question is from Greg Quinn of Market News.
Good morning. I want to amplify the question on housing a bit. People have cited not just the pandemic, but low for long interest rates as driving up home prices. Does the Bank of Canada not need to do anything here to help prevent any of the dangers in mortgage markets and housing markets?
Greg, I mean, look, there's no question, Greg, that low interest rates have made borrowing more affordable, and that helps people buy houses and increases the demand for houses. There is this combination of very unique circumstances where people really want more space and interest rates, mortgage rates are low, which is making borrowing more affordable. Together, those are stimulating demand. With respect to monetary policy, Greg, monetary policy, it's a broad macro instrument, and we really need to look at the needs of the whole economy. The housing market is an important part of the economy. The housing market is built into our projection. When we look at the whole economy, there's still at least 500,000 Canadians who are out of work relative to the employment rate before the pandemic. There's considerable excess supply in the economy. Right now, the economy needs our support, and we are committed to providing the support the economy needs to support recovery and get inflation back to target. With respect to housing, our role particularly focuses on providing information and analysis. As I mentioned, we put out some analysis a couple of weeks ago. We will have more in our financial system review. This analysis should be helpful for Canadians taking decisions. It should be helpful for the financial community and lenders. And it's also helpful for other levels of government, OSFI, that play a role in this market.
Okay, yeah, so he just kind of said what Stephen Poloz said, what I was just talking about, right? Tiff Macklem just said, just to break this down to what what he said essentially was that we as the Bank of Canada, they don't actually have a mandate to even care about housing, right? They have to care about the general economy, make sure financial systems are running smoothly, and they want to hit that 2% inflation rate. That's all they really care about. That's all that's in their mandate. He's saying, well, when we look at the broader economy, and this is talking about like why the Bank of Canada is kind of stuck between a rock and a hard place right now. Like if they are to raise interest rates to slow down the housing market, well then when you raise interest rates, it's shown in employment as well, right? We have so many Canadians out of work. If we raise interest rates, it's more expensive for businesses to borrow, start new businesses, hire on more people. So we generally see unemployment go up along with interest rates, right? In tandem. So if they just say, hey, we're going to solve the problem in the housing market and bump up interest rates, well, there's a lot of problems that come with that too. So I'm definitely not the guy who's smart enough to tell you exactly what they should do. I'm just very interested in watching what they do, and and providing a little bit of analysis on it and what's going on here. It's such interesting stuff. Okay. Is he not? Okay, there we go.
Secondly, to go back to the bond purchases, one of your deputies mentioned a potential scenario where the size of the balance sheet became the target and not the pace of purchases. Is that a reasonable scenario? And how would kind of keeping a fixed size of assets on the Bank of Canada's balance sheet kind of aid in economic recovery?
Well, when you assess the stimulus from quantitative easing, you need to look at least three things. You need to look at the pace of the purchases, you need to look at the composition or the maturity structure of the purchases, and you need to look at the size of the balance sheet. So our decision today to adjust our quantitative easing to a target of $3 billion per week adjusts the pace. We're going to keep the maturity composition of our purchases roughly the same. You know, what that adjustment means is that we will still be adding incremental stimulus. Our balance sheet will continue to grow, and so we are continuing to provide exceptional stimulus, and that's reflected really in the fact that our balance sheet will continue growing.
Thank you. The next question is from Jordan Press of Canadian Press, followed by Kim McCrail and Greg Bunnell.
Good morning, Governor. I wanted to just ask you to maybe elaborate a little more on what you said earlier, where you said we're looking for a complete recovery. And I'm wondering if you can explain what that means, particularly in the context of some of the groups you have mentioned are hardest hit through this pandemic, particularly women, youth, and low-wage workers.
Look, I think the message here is, we've made considerable progress. The outlook is better than expected, but there's still a long way to go. We have a lot of excess supply in the economy. So important parts of the economy are very weak, and we have too many Canadians that are unemployed. We're looking for, so this recovery has some way to go. As we've indicated, the outlook is better. We are expecting that slack will now be absorbed sometime in the second half of 2022. But there is a lot of uncertainty about that. We will be looking at a broad range of indicators to assess this complete recovery. That's going to include a range of labor market indicators. As I've indicated, this pandemic is having very uneven effects in the labor market, particularly affecting low-wage workers, women, youth. There's a chart in the Monetary Policy Report that shows that low-wage workers are at about 80% of their pre-pandemic level, or 20% below their pre-pandemic level. If you look at all other workers, they're actually back to their pre-pandemic level, which really highlights the very unevenness. So in assessing a complete recovery, we need to look at overall employment, and we need to look at that is a shared recovery.
Yeah, I mean the data is showing that the industries that are recovering are the higher income industries, right? People who can work from home. They've been a lot more hardy in their response over time, right? People have been able to go back to work more soon, and they haven't been affected by the various second, third waves as heavily as people working in the lower income area, like the service sectors and in restaurants and entertainment, right? We're seeing a very uneven recovery, and I want to bring up so Roselle, this comment that you just put, translation, we need to keep interest rates low so the federal government can service its debt. We understand that having a major impact on young first-time home buyers. We are okay with that. That's definitely part of what they're saying, right? Well, the federal government, when they take on this huge amount of debt, and this is not just Canada, right? This is across the world. There's increasing levels of debt, more stimulus spending throughout the pandemic. Lots of central banks are doing the quantitative easing program that's essentially funding this at a low interest rate. And yeah, like what's the government of Canada going to do if interest rates go up, right? They say they're trying to lock in these interest rates in longer term bonds that they're issuing, even a 50-year bond kicking the can down the road that amount of time. But what happens if they're not able to get the demand in those longer term bonds? Well, then the government of Canada is going to have a real financing problem when it comes to their debt servicing, which they've just raised the ceiling on up to $1.6 trillion, right? Yeah, $1.6 trillion, $1.8 trillion, a $600 billion increase from the previous credit limit for Canada. Now, there's other factors to it too, right? There's other reasons why they may not want to raise interest rates, because there certainly is a human effect and a human outcome when interest rates are raised, right? Like I said, it has impacts on employment, right? If we raise interest rates, it makes it more expensive to spend for businesses and makes them less likely to hire more people. So we have a jobs problem, but we also have a housing problem. We also have a Government of Canada debt problem, right? And these are all things that make the decision to raise interest rates a little bit more complex than some people make it out to be. Yeah, interesting point there.
And just as a follow-up, just to ask about housing a little more, you mentioned the budgets, the federal budget measure for the tax on vacant homes. Can you just explain a bit about how that can help keep some stock in the market? I'm wondering what can it not do in a sense that you feel maybe still should be done to help all those Canadians, as you said, who are writing you concerned about being able to afford a home?
Well, I guess for the details of the budget, you really need to speak to the Minister of Finance. But with respect to the 1% tax on vacant homes, if you go back to 2016, 2017, one of the things we saw is that particularly in Vancouver and Toronto, there was some evidence that foreign purchases of homes were contributing to the large price increases we saw. And there's certainly some evidence that those homes were being purchased not to live in, they're being purchased as investments, and they're vacant. And the problem with that is that when you purchase a home and you leave it vacant, you're taking housing stock effectively out of the market. Nobody can live in it. A tax on vacant homes, what it'll do is, first of all, it'll probably dampen enthusiasm for speculative buying of homes, but to the extent that those homes are purchased, it'll encourage the owners to rent them out. So people are living in those homes, and they are contributing to the housing stock there.
Yeah, Sanjay, let's be nice to each other in the chat here.
And what we're seeing in the market is that demand is running ahead of supply. A big part of the solution is to get supply to catch up with demand.
Thank you. The next question is from Kim McCrail of the Wall Street Journal. Go ahead, Kim.
Hi, thanks. My question actually will continue in the thread around housing. And I'm wondering, you mentioned the recent staff research that was done on housing, and one of those pieces of research showed significant growth in new mortgages from households with high loan-to-income ratios. I just wondered if you could speak to how your view of the risks around mortgages originated from households with high levels of debt and high loan-to-income ratios how is your view around that changing, and how concerned are you specifically about that piece of the housing market?
That's an interesting question. She's saying that there's a higher portion of people that are buying homes with less of a down payment, right? More leverage, more debt, higher debt to equity ratio. But largely those would be insured mortgages. So I doubt that they're really all that concerned about it. Remember, if you put down under 20%, you have to have a CMHC, or I guess Genworth also, insured mortgage, meaning if you don't make your payments, well, you're insured, and the big banks are insured against that. So they're probably not too concerned about that from a financial structural level, but on the human level, it is concerning. And it speaks out to what we have different here in Canada than we do in the States, right? In the States, you're able to, when you lock in a mortgage for 25, 30 years, well, you get that interest rate for the entirety of it, right? Here in Canada, we don't have that. We have terms to our mortgages, right? Most common one is a 5-year term, right? Your mortgage is going to last 5 years, and then you've got to renew it, and it's likely going to be at that new rate if you have a fixed rate mortgage, right? Variable rate goes up and down over time. And variable can actually, if your interest rates are going up, it can make you more accustomed to the raising interest rate, so it's not as much of a shock after 5 years. But this is something that's a concern, right? If all these people who are buying houses now at like 2% interest rates, well, maybe they can afford 2%. They had to go through the stress test maybe to qualify for 4.5%. But what if interest rates go above that? Are we going to see a lot of people not able to afford their housing payments? Let's listen into what his response is.
Well, Kim, we will have more to say about that when we'll have a whole other press conference when we issue the financial system review. Today really the focus is on monetary policy. But what I can say is that a few weeks ago we put out some analysis of what we're seeing in housing markets, and one of the things you do see is that there is rising loan to income ratios. So when you see people taking out bigger loans relative to their income, you worry that they may be overstretching. And as I said, in an environment where we've seen rapid price increases, there is a danger that people extrapolate those price increases. They expect that those will continue, and they overstretch on that basis. That's something that's worrying us. We are seeing some evidence of extrapolative expectations and speculative behavior. And as I said earlier, I think the proposal by OSFI to put a minimum qualifying rate in place will be helpful in that regard, because it'll protect, particularly in this low interest rate environment, it'll protect borrowers from overstretching.
And just as a follow-up, I wanted to ask about, there were a couple of references in the monetary policy report today to immigration and the role that might play in the economic outlook. And I think you mentioned in that immigration was lower than anticipated last year, but will be higher than expected this year. Can you just speak to what might be different in the economic outlook you presented today if it weren't for what looks like will be a sharp rise in immigration this year?
Kim, we were having a bit of trouble hearing your question. So I got it. It's about immigration. And can you just, what aspect?
Kim, maybe I can
sorry about that. Is it better?
Yes, that is much better. Yeah. Thank you.
Okay, sorry about that. So the question is, what impact, I guess maybe I'll just rephrase it a bit, what impact does the expected significant increase in immigration this coming year have on the economic outlook? And in the reverse, what would the economic outlook potentially look like if we weren't expecting that big increase?
So, through the pandemic, immigration, for obvious reasons, has been much lower than usual. That has been one of the factors that is reducing our potential output. It means our labor force is growing more slowly. We don't have new workers coming into the economy. The rebound in immigration is one factor that is contributing to the rebound in potential output growth. So it'll grow the supply of the economy. It obviously also grows demand in the economy. You've got more people working, that creates more income. They go shopping, that creates more demand. So that is that. The increases in immigration that are projected by the government are built into our outlook.
Okay, the next and final question is from Greg Bunnell of BNN Bloomberg. Go ahead, Greg.
Yes, Governor, thanks for taking my question. I want to go back to July of last year, which obviously in many ways was a different time, but you did have a message for Canadians then. You said, if you've got a mortgage or if you're considering making a major purchase or you're a business and you're considering making an investment, you can be confident that rates will be low for a long time. Given today's NPR, given today's outlook for the economy, if you had to update that message to Canadians, what would the update be?
Greg, my message to Canadians would be, I'd summarize it in 3 words: progress, time, and commitment. We're making good progress. Canadians and Canadian businesses have been impressively resilient to the pandemic. The outlook is looking better. Vaccines are rolling out, and there are brighter days ahead. And reflecting that, we have revised up our outlook. But second, time. It is still going to take some time to get to a complete recovery. This third wave is a setback. It is straining healthcare systems in part of the country. It will unfortunately particularly affect, once again, the hardest hit sectors and then the workers in those sectors. Important parts of the economy remain very weak. We have too many unemployed Canadians in this country. The third commitment, the Bank of Canada is committed to supporting Canadians and Canadian businesses through the full length of the recovery. And those were really the central considerations in our decision today to adjust our quantitative easing program and maintain the exceptional monetary stimulus.
Yeah, like in the previous monetary policy report where they did this similar press conference, Tiff Macklem made a statement saying, hey, we're not going to raise interest rates to 2023. Now they're saying it could be 2022. So this reporter just said, hey, well, what's your message to people now? Should businesses still be comfortable in securing loans that are potentially going to run out around that time? Should they be comfortable that interest rates are still going to be low? And Tiff Macklem saying, hey, there's still work to be done, but we're seeing more economic growth than we expected. So as a result, we need to be flexible with our policy and lower or start raising interest rates by changing the amount of bonds we're buying with the quantitative easing program.
Just as a follow-up, I want to say, when I saw the decision today, when I saw the inflation expectations being pulled forward to perhaps hitting target by next year instead of 2023, just that idea of when you said you can be confident rates will be low for a long time, it felt like to me that statement, that outlook has changed, that sort of some people have taken as a low rate guarantee. Do you feel that it has shifted?
Our commitment from the beginning, Greg, has been with respect to our forward guidance, which, as I indicated earlier, it is an outcome-based forward guidance. We are committed to hold the policy rate at the effective lower bound until slack is absorbed to sustainably achieve our 2% inflation target. What we're doing, the good news today is that the economy has proven resilient. The outlook, vaccines are rolling out. The outlook is better. We think we're going to get back to a complete recovery sooner than we thought before. That's a good news story. That's what everybody wants. We've updated Canadians to reflect our latest outlook.
Thank you very much. Thank you, Governor. That concludes today's press conference. Thank you, everybody, for joining us today.
Okay. So
thank you very much.
Lots in that statement. Lots going on here. Lots that's going to affect multiple different things: housing, the government's ability to spend, the current wealth inequality crisis that is really going on, and that's largely tied to the housing market and the way we're seeing large asset inflation since the beginning of the pandemic. So what they're saying, they're going to scale back their quantitative easing program down to $3 billion per week of bonds, Canadian government bonds purchased, instead of 4, which was, of course, down from the previous 5 even earlier at the beginning of the pandemic. Now, when they buy all of these bonds, essentially what they do is artificially suppress interest rates. So what they're saying here is, hey, interest rates might go up a little bit in the short term. That has big effects on a lot of different things, has effects on housing, right? As interest rates go up, people can borrow less and can afford less house. So we could see some impacts on the housing market. But largely, people don't believe it's going to be enough. Certainly from the reporters here who asked questions, they were asking questions all about, what is this really going to do? What's your plan for the housing market? And the Bank of Canada governor here, Tiff Macklem, just said, well, we're looking to OSFI, right? The Office of the Superintendent, who regulates the big banks and these larger financial institutions. They're saying OSFI's changes to the mortgage stress test should lower borrowing power. They're hoping that that's going to do something. And they also point to Chrystia Freeland's budget, saying there's going to be a 1% tax on vacant residences. Now that's 1% per year, right? So 1% of the value of the home per year is going to be taxed for foreign non-Canadian buyers who don't have anyone inside the property. It's just sitting there vacant. Whether or not that's actually going to curb the investment in Canadian real estate from foreign buyers, well, that remains to be seen, right? If you think about it, if you believe that inflation is higher than the actual 2% that the CPI would indicate. Well, it's lower than 2% right now based on the CPI. But if you believe that inflation is actually higher than that, what is a 1% tax really going to do when you're trying to hedge against that inflation that's already higher, right? It could be a slight disincentive, but whether or not it's actually going to do anything to significantly slow down the housing market, well, in my eyes, it seems a little bit less likely, right? That these changes are going to actually be substantial. I think the biggest thing that's going to affect the housing market is changes to the interest rate in the long term, the raising of interest rate that could likely do it, along with credit tightening that could happen in the future, but we haven't seen any indication of that apart from this OSFI change, which again has this hard deadline of June 10th, June 9th or something like that. So buyers are going to rush out knowing that they're going to have less purchasing power after that. It could lead to more FOMO, more people being speculative in the buying. So interesting stuff in here. Interesting stuff. Yeah, wow. I was expecting a little bit more on housing, to be honest, both in the budget that was released on Monday and in this press conference. But he does say that in a month they're coming out with a review of the financial system, what's going on in the financial system right now. And he really did hint that there's going to be more on housing in there. But again, whether or not that's going to do anything substantial, well, that remains to be seen, right? If I was someone looking to buy a house right now, I don't see any policies that are going to slow down the current housing market, right? Like, I'm not hearing anything from the Bank of Canada that says anything's going to slow. They did stop short of saying we're okay with a runaway housing market if it supports the rest of the economy, which is essentially what Stephen Poloz, the former Bank of Canada governor, said. They're stopping short of that because if they were to signal something like that, well, they'd sort of be amplifying the problem that they probably already see. So at least public facing, the Bank of Canada is saying we don't see many fundamental issues with the market. We're not going to change all that much, but they're not outright saying that they're making the decision to keep things the way they are when it comes to housing. But really, it is the Bank of Canada that's affecting the interest rates and as a result bumping up these housing prices, right? Interesting stuff in here. I'm going to make chat a little bit bigger here so you guys can see, because we're going to go and take a second here to do some Q&A to close out this stream. Lots of interesting stuff in there, and I want to know what you guys think about all of it. Do you think there should be more done in the housing system? Do you think that the potential raising of interest rates in the future could pose a problem for Canada's government going forward in their ability to afford all the programs that were just presented in Monday's budget? What do you guys think? Do you have any questions? Again, you can always type at Russell Matthews in the chat, and it'll actually show me that it's a question, right? So if you're asking me a question directly that you want me to answer, that's a good way to do it. I'm seeing lots of people in the chat here. Thomas says, we have high unemployment, but are going to increase immigration. No, yeah, it's definitely a concern that some people, like the targets of immigration, they have increased. Whether or not we're going to be able to hit those targets is another story. With lower employment numbers here in Canada, do certain places that people can immigrate from, is it as attractive to come to Canada? It'll be interesting to see if we hit those targets. 1% tax, Biyut says, foreigners, how to avoid it? Call people family in Canada that don't own a house and buy under their names or corporations. Yeah, I mean, that That's certainly something they could do, but they could also just hire a property manager that would charge likely less than 1% of the value of the property to rent out the property. And then all of a sudden they don't get taxed anymore, right? So it's just more of a minor inconvenience. They have to hire a property manager to manage it from overseas, right? So like there are workarounds here. It's just only vacant properties, totally vacant, sitting empty, right? John G says, houses will go up. Inflation is 160% on construction material to build and renovate a house. Yeah, that's it's incredible how expensive lumber is right now, and the cost of building just going up. That could certainly cause more housing price increases, right? I do wonder over the long term, though, if we're seeing an increase of price in lumber, is the market efficient enough to bring in more suppliers of lumber, right, to lower the inflationary pressures? That's something, right? Could we see more people go into the lumber production and supply chain business as a result of the increased prices? And will that competition bring down those prices? Some people make the argument that, hey, people are now used to paying this much money for a 2x4. Even if there's more competition, maybe they'll just keep it artificially high now that people are used to paying that. There are questions about how efficient a market can be in that respect. George Keller says, been into Bitcoin for years, never lost. Good to hear, George. Yeah, crypto is definitely an interesting space. I hold around 5% of my net worth in cryptocurrency, both in Bitcoin, Ethereum, and a little bit of Cardano. I definitely think it's interesting. Some of the decentralized finance potential, that's very interesting as well. Being able to have things that function like companies and function like regulatory bodies, but without actually having the power be in some one person's hands. Well, there's interesting things there in the future, and I definitely think it's going to be a part of our future. But in terms of volatility, like I'm thinking of Bitcoin and cryptocurrency as a long-term play, right? 20 years plus. I'm expecting to see at some point a 30, 40, 50% drop in all cryptocurrencies at some point. Like I don't know why that would happen. I don't know if it will happen or when it will happen, but I'm mentally preparing myself for something like that. And if you're investing in cryptocurrency, I'd recommend that you take a look at your risk tolerance, right? And if you're happy with holding it through an event like that, well, then maybe it's a little bit less risky for you to invest. Robert says, I grew up in upper middle class in divorce. I became poverty for 5 years. I will never live like this, either upper middle class again or Bill C7 for me. Yeah, it's tough situations like that. I'm sorry you had to go through that, Robert. Yeah, Sanjay says, you want to bet me house prices aren't going to go down. They'll do everything to save it. Well, this is another thing that we have to consider when it comes to housing, right? Even if there's some black swan crazy event that happens that could see housing prices go down, well, let's look back to the previous black swan event that happened, COVID, right? The pandemic. What was the first thing? Like literally one of the first supports that came out was the mortgage forbearance, not forbearance here, mortgage deferrals is what it was called in Canada. But the big bank said, hey, you can just tack on these months to the end of your loan and we're going to bail out homeowners, right? So like I can see why people are thinking, hey, it's very minimal risk to take on debt at this low interest rate level, buy a house, even if we're stretching it close and we might not be able to afford it. Well, the government is going to bail us out, right? Housing market is such a big part of Canada's economy. Can we afford for a major crash to happen? Well, these are all the questions we have to ask. I'm not the one with the answers here. I don't think anyone really knows for sure. You can ask 10 different people about the real estate market. You're going to get 10 different answers. If anyone tells you they know for sure what's going to happen, I'd say run the other way. That's why I always tell them my real estate clients, because I'm a realtor in the Greater Toronto area as my full-time job. But if anyone says, hey, this is going to happen for certain, I would turn the other way. But it's interesting to watch all these factors that could impact the housing market, right? Steve Zaberi says, I want to know exactly the framework on QE, how that impacts inflation. We have cut corporate taxes 20% in the last 40 years. Isn't taxes how inflation is controlled? Isn't any inflation bad? So there's a little bit to unpack in there, Steve. And again, I'm not an economist. This is from my research and what I understand. There's certainly people that will have different perspectives, but I'll do my best here to answer it. So let's work backwards. You said, isn't any inflation bad? Well, the Bank of Canada has 2% inflation as their target, and most economists believe that a small amount of inflation is healthy for an economy, because you don't just want a stagnation, right? It has to do with people's perceptions of how they should spend their money, right? A little bit of inflation disincentivizes people from holding cash in the long term from hoarding, right? So you see more spending in the economy, and that can do well for stimulating the economy, right? If people think that there's going to be deflation, well, then maybe people won't spend. This is why deflation is a big concern as well, right? Because of the impact it has on people's attitudes when it comes to spending in the economy. So that covers isn't any inflation bad? Isn't taxes how inflation is controlled? I would say that the main controller of inflation is actually interest rates, right? When the Bank of Canada sees high inflation, they'll raise interest rates. When they see low inflation, they'll lower interest rates. I believe that's the main lever that the Bank of Canada pulls in order to control inflation. And yeah, I'm not entirely sure about the corporate taxes, 20% in the last 40 years, but yeah, the exact framework for quantitative easing, but without getting into the depths of it, essentially, okay, it's a little bit complex, but the Bank of Canada pays for the program, or the government of Canada pays for the programs that it puts out, not through taxes, largely through IOU notes, right, that are called Government of Canada bonds. Now, these Government of Canada bonds are bought by big institutional investors, as well as the little guys sometimes too, but the return isn't that great, so not as many retail investors will buy bonds these days. But you see the big banks buying huge amount of Government of Canada bonds. With the quantitative easing program, the Bank of Canada said, hey, big banks, we will gladly buy those Government of Canada bonds from you, right? We're going to buy the bonds from you that you bought from the Canada government. And when they buy bonds, it drives up the price of bonds, and as a result, down the interest rate that's on those bonds. And that affects mortgages and things like this, because those rates are tied to Bank of Canada bond rates. So where am I here? The government, or the Bank of Canada, buys those bonds from the big banks, but they don't pay them in money. They pay them in something called settlement balances. All of these big banks have accounts at the Bank of Canada, where, and inside of those accounts, they can trade with each other to settle transactions between the big banks. This is happening all the time. But because of that, the big banks have more capital, more liquidity, and they're able to push that into the market via mortgages. And that's how this essentially printed money works its way into the system, because the Bank of Canada doesn't actually give straight out usable money to these big banks for buying these bonds. They give them settlement balances, special money that can only be controlled inside of their accounts. So I probably lost around 30 viewers to giving that explanation, because it's a little bit dense, but I hope that that's helpful for you. All right, Paula says, I sold my Bitcoin at 42,000 in January, but now it's about 70,000 and gone up to 81K. By selling my Bitcoin, all my debts were gone except for mortgage. I do earn about $450 per month with mining Ethereum with 4 GPUs. Okay, cool, Paul. Well, you know, like, it's easy to get negative about missing out on potential gains, but if you've made a change in your life stress because of the lack of some of your debts, right? Maybe that was high interest rate debt, and you're able to save a lot of money because of that. I don't think it's necessarily was a bad idea, right? Very interesting stuff. Louise Anderson says, lumber is up over 200%, fuel prices, food and essentials up. Our next heating and utility bills will have added carbon tax. These do not include housing costs. The average income is $54,000. Yeah, I mean, there's lots to talk about when it comes to the lack of wages being able to keep up with the cost of living, right? Especially with rent prices, housing prices. They've just gone totally out of whack, and they haven't grown at the same rate. And it's so interesting politically to watch all of this too, right? Because you have two traditionally very different parties making the exact same sort of comments. Both the NDP and the Conservatives are talking about this very issue, the growing wealth gap, the fact that wages haven't kept up with housing prices and with the cost of living here in Canada. Now they have very different ideas on how they can solve that. The NDP want to give more, spend more on Canadians directly, support them, and tax the most wealthy and the most successful businesses. They want to increase the taxes on them in order to pay for increasing the standard of living of low-income Canadians, right? Conservatives say, hey, let's just spend less. We can raise interest rates again a little bit, see if the housing will come down, and be a little bit more prudent with the way we're handling our spending and just the fiscal situation for the government of Canada. But they're ringing the same alarm bells, right? They're saying this isn't sustainable. What are we going to do long term? But their ideas on how they're going to solve it are a little bit different. But they're saying, hey, the Liberal government hasn't stepped in to change this. The quality of living for low-income Canadians is going down. Conservatives and NDP are both saying the same thing, but in different voices. Yeah, I'm glad that dense explanation was helpful, Alex. I also made a video on it. Once you're done with this live stream, go check it out if that piqued your interest, the quantitative easing, where I walk you through step by step exactly what's going on. I think if you search Russell Matthews Canada's Money Printer, I do a really detailed breakdown over like 15 minutes on all the inner workings there. It took me a while to really understand. Like I had to sit down and draw it out to figure it out myself on exactly how it was working, because they're not the most clear on how it actually works. Yeah, the corporate tax rate has gone up. Interesting. There's people think that we need to tax corporations more so that we can implement more social programs. But what effect does that have on employment? If we more heavily tax businesses that are employing Canadians, well, does that mean there's less jobs for Canadians? Lots of long-term considerations that I personally don't feel like I have enough data on knowing exactly how that would affect things long-term. But I think you definitely do want to incentivize some business in Canada, right? And Chrystia Freeland thinks the same thing with her budget, saying the only fiscal anchor we're putting on this budget is our debt to GDP ratio, and we want to keep that around 50%, and that's sustainable long term. She thinks by growing the economy, more jobs, more businesses, especially in green and high tech and sciences, right? Quantum computing as well as genomics and AI. These are things that were all considered and talked about in the budget. She thinks that, hey, we can actually grow Canada's economy so that the increased debt we're taking on is less of a percentage of our economy on a yearly basis. Interesting stuff. Yeah, Paul Paco, crypto taxes are fun to keep track of. Yeah, it's interesting because I believe in Canada they're seen as an investment, not as a commodity like a currency. So I believe that they're taxed in terms of capital gains. Yeah, but Panos is making a point here. Most people don't declare capital gains when selling your crypto or stocks or even online selling like eBay. Get ready, government coming for it. Yeah, I mean, you got to stay on top of that stuff. You got to stay on top of that stuff. If you think that the government of Canada isn't aware of what's going on in crypto right now, then I'd look over your shoulder a little bit. Make sure you got all that on the up and up. J. Mar says, the bottom line is home prices must come down. What's the difference? How they come down, slow or fast, same bottom line. Well, I mean, it's tricky, right? It's a little bit more complex than that, though, Jay, I think, because I think that the interest rates are going to be the largest determiner of what happens in the housing market. When you raise interest rates, there's less borrowing power. People can pay less for homes. Home prices go down generally, right? That's what we've seen in the past. But the thing that happens with interest rates is when you raise them also, there's less business spending, less spending in the economy because money is more expensive to borrow, right? So this has some other negative economic factors than just housing. So if we can't change interest rate without affecting those other things, well, what other levers can we really pull on to control the housing market? So the Bank of Canada is stuck between a rock and a hard place right now because people are going to be mad at them if there's a higher unemployment numbers because of their higher interest rates, but at the same time, they're going to be mad at them for the runaway housing market, right? So I don't know what I would do if I was in their shoes. It's definitely a crappy place to be right now. But I'd say to every single Canadian, I think that it's so important to learn more about investing and personal finance and saving your money as much as you possibly can by implementing things like house hacking, rent hacking, a whole bunch of other strategies to save more money, and also strategies to earn more money in this new economy, this digital new economy, right? This green, very tech-based economy, how you can make more money with scaling your income in scalable ways, right? I think it's important to learn about, as well as investing all of the spread between your savings and your increased earnings. Like the wealth gap is growing. I don't see it changing. I think, as crappy as it is to say, you got to try to be as close to the wealth side of it as you possibly can right now to look out for you and yours, right? You can't rely on the government to solve this problem. I personally don't have faith that it's going to be solved. I think that it's going to grow even more. So really important to keep learning about that stuff. Minor plug, I just released a course on some of those topics. So if you're interested in it, check it out in the description. 50% off with coupon code LAUNCH. Covers all of the stuff you should have been taught in high school about money. But yeah, lots of interesting stuff in here. Alex says, how has lockdown protocols affected your business operations? I understand you're in real estate sales. Yeah, it has affected things. In terms of lockdown protocols, really, we just can't have open houses, but you can still do showings. It hasn't really slowed down in terms of that. There's lots of demand in buyers. Working with buyers right now is difficult. I've worked with buyers throughout the pandemic, and we have been able to get deals locked up around asking price, even in some cases under asking price on certain properties that I've worked on. But it is more challenging right now. You really need a good realtor to help you through implementing other strategies that can help you right in this competitive marketplace when you're working as a buyer. Now, sellers have a relatively easy time right now. You got to be competitive with your listing price so you get enough eyeballs on it, but there's lots of demand for houses right now. The problem is people who are moving out of houses, well, they become buyers when they move out of the housing market, which is a difficult place to be in. So less sellers are selling because of how hard it is to be a buyer, right? So it's sort of like a self-perpetuating thing, but that's been some of the impacts on my real estate business. LB says, I live in BC Interior and I'm trying to get into the condo market. It's been a total bidding war. Do you see it calming down at all this year once COVID restrictions loosen? It's tough to tell. And like I'll always say this, if anyone tells you they know for sure, run the other way. I'll give you my thoughts based on what the Bank of Canada is saying here about maybe not raising interest rates significantly in the short term. I think for the short term, I am bullish on real estate. I think it's going to continue to increase over the short term. Now, long term, things get a little more murky on what's going to happen. But based on what was announced in the budget on Monday by the federal government, and based on what Tiff Macklem just said, they're really looking towards off-seas changes to borrowing power. But all of this to say, I don't think there's going to be a slowdown in the short term. That's where I'm currently thinking. And people say, Russell, you're a realtor. You're just trying to pump real estate. I'll be the first one to tell you if I think that there are risks to the real estate market. But that's where I'm thinking. When it comes to like right now in this market, LB, I think you got to be prepared to pay a little bit more than you expect, and you got to do the things that take you the extra mile. You got to write a cover letter to go on your offer, have your realtor that you're working with attach it to the actual PDF that is sent with the offer, so that when that realtor is showing the offers to their client, then hey, maybe there's a little bit of information about you. Like real estate is such an inefficient market. Right? It's such a people business. And if you can somehow connect with the people who are selling their home, people are emotional about their homes. These are things that you can do to help you get a house in a difficult time right now as a buyer. And some of the strategies that I've worked with some of my buyer clients in implementing. But best of luck to you, LB. Okay. Ralph says, what's the general sentiment in the housing market, current and future, amongst you and your colleagues? Well, I kind of just went over that. So hopefully you got an answer from that. That's definitely my view. I mean, I think that probably only 5% of realtors, I would say, actually pay attention to some of these more macroeconomic things. I think a lot of people don't find it very interesting, but I personally do. So that's why I think what I think. But you'll hear a lot of realtors saying the narrative of, oh, people are moving out, they want more space. It is true, but I think a larger driver is this macroeconomic stuff, like what are interest rates? What's the Bank of Canada doing with quantitative easing? That's how I'm coming to my assumptions about real estate. Jennifer Thompson says, Russell, is it cheaper to buy a commercial property right now and convert it to residential? Well, it's really tricky. And what I would be worried about there, Jennifer, is depending on what city you're working with cities to get permits on things like that and working within their zoning laws can be super, super challenging. In the budget here, Chrystia Freeland said they're going to put money towards doing just that, converting previous office space into residential units. Okay, here's the camera again. Yeah, but it really does come down to, Jennifer, the costs of doing said renovations and looking at that versus what it would be just to buy a typical residential home, as well as the added stress of having to work with cities, because cities can be kind of brutal in some situations about permits. Arnold says, what area do I do real estate in? I'm in the Greater Toronto area. I work everywhere in that Greater Toronto area, usually east of the city, right? I live in the Durham region, so anywhere east of Toronto is my specialty, right? The Pickering, the Ajax, the Scarborough, the Whitby, Oshawa, Peterborough, Belleville area as well, a little bit of Port Hope, all of that sort of eastern along Lake Ontario is where I generally do most of my work. But I have worked west of the city as well, out in Grimsby as well. Alex K says, and Alex, thanks for being such a thoughtful participant in the chat here. Alex K says, USA Fed has decided to update M2, the money supply, only on a monthly basis moving forward. Any thoughts on why the change, especially now? I don't know enough about that to give you too much of a estimate on why they would do that. Was it formerly weekly? I think that is that what it was? I think it may have been formerly weekly or maybe even daily. I mean, maybe it's supposed to make it so that people are reacting less sporadically on the data that's changing, but it might provide a shock, like if there's more quantitative easing in the USA with Jerome Powell and his money printer goes burr mentality, which is across the entire world right now in many places. But on a monthly basis moving forward, I think it's probably not going to have a big effect on things. People maybe we'll see the markets moving a little bit more on those days that it's released, but I think it's probably going to average out to about the same. Yeah, thanks for tuning in, George. I'm glad you enjoyed the show. Russell, all this is gouging. I have a friend trying to buy a house in London, Ontario. I mean, it's tricky right now. It certainly is tricky. You need to take the right steps. You got to be prepared to pay more right now, or move to a place that you can afford to buy real estate, right? Like, these are the tough realities that people are being faced with. I always recommend, and I talk about this a bunch in the course, but I recommend, if you're someone who is not in the housing market right now, I'd recommend trying to get in. And if that seems unfeasible to you, well, then it's a matter of needing to maybe earn a little bit more or spend a little bit less, right, to save up your down payment. One of the best ways to spend less is to eliminate. I think financial planners get it wrong, saying you got to focus on your Starbucks, focus on your restaurants. That's going to have an impact, but you got to focus on the bigger things. Housing and your car, these are some of the bigger expenses that Canadians deal with. And if we can dramatically reduce that, well, then you're going to be able to save a lot more. This is, I think, the solution for a lot of people. I recommend rent hacking, like either moving to a place and renting a place that's a little bit below where you want to be in terms of quality of neighborhood and size of place, and also potentially looking for a place with a bunch of rooms, renting out those rooms to cover the entirety of your housing cost, right? This is rent hacking. If you own a home, this is what I do. I house hack my house, and I rent out the basement of my 2-unit building. I did a renovation underneath in my home and made this a full secondary unit. So, and I operate an Airbnb there, and it pays the entirety of my mortgage. As a result, I'm able to take that $2,400 a month that I would have had to put towards the mortgage and invest it, right? And this is what's helping me be a little bit more stable. These are, I go into a way more detail in the course if you're interested, but always happy to talk about that. I think we need to all be learning about some of these strategies, because you can't count on the government to solve these problems. That's the way I see it. Yeah, John says, thanks for doing these live streams and videos. Been enjoying them a lot. Wish more people were interested in this kind of stuff so everyone can keep more informed. Yeah, I'm happy you're enjoying it. And if you have any friends that might be into it, feel free to let them know about the channel. But I'm happy with it. Like, I love these live streams. I say it every time. The fact that we can have a few hundred people in here and I can actually get to know you. I'm getting to recognize people. I see Alex and Pixel in the chat, and Robert and John. I've seen you as well before, and Don. Like, we're seeing all these people consistently coming back. And that's how I get to know you. Like, when you comment on my videos, I see that as well, but it's a little more abstract than actually doing it live in person like this. So it's great to get to know some of you and recognize some familiar faces, and we can sort of wade through the craziness that is this world together right now. Yeah, thanks, Alex. Yeah, feel free to like the video if you haven't already done so. I think 260 people watching now, 90 likes. I think we can improve that. It helps at the channel. Thanks for doing that, you guys. John N says, I only just got a decent job that makes enough money to have an option to even buy property. Dying to buy one, but I've been rolling the dice in hopes the government steps in to further reduce costs. Yeah, then you must have been a little bit disappointed by the budget and by this announcement. Really not much to reduce costs coming from the federal government or from the Bank of Canada. Really relying on OFSI, and I don't think that change is going to do a whole heck of a lot. So, John, if you're looking for a place, I always think time in the market is better than trying to time the market, right? As long as you're looking at the long term, I think that buying and holding that for the long term is the better play than hoping and potentially having it run away from you. Again, take that with a grain of salt. Everyone's going to give you different advice, but as long as if you prioritize doing something like house hacking, then make sure that you can, even in a worst case scenario, move out of your home and rent it fully to pay the mortgage, right? This dramatically reduces the risk of buying a home. So as long as you can sort of keep those numbers, you take a look at it from an investment point of view, even if it's your primary residence, well, I think buying real estate is rather low risk because you have such low interest rate money, and you can put 5% down and have control over 95% leverage of an asset, right? Like you can put on a $500,000 home, you can put 5% down and then have control of that entire $500,000 asset at a super low interest rate. This is one of the benefits of real estate, right? Because then that appreciation is actually a leveraged return on your investment, right? You're putting in so much less and seeing so much greater of a return. That's leverage, but it's not leverage like in the stock market going into margin. It's leverage that maybe your mortgage is insured as well, and the government can step in to help you out. So whether or not you think this is the way that things should be, whether or not you think this is the way the rules should be, you got to play the game by the rules that are there. I say that all the time, but I really think it's a reality. We can't be hoping for the government to change things before we take action to try to take our personal finances to the next level. Great thought there, John. Best of luck to you as you go into it. It's tough out there right now. Kelly, the coach, says, "Hey, Russell, first, totally love and appreciate your knowledge and channel. Have been following you for a few months. Share your..." Oh, thanks, Kelly. And you say signed up for your monthly subscription. Oh, thank you for joining. I think you're referring to the clicking the join button down below. I appreciate that. Any support helps keep this channel going, and it makes me feel like people are getting some value out of this, and I appreciate it. Thank you for that, Kelly. I've seen you on a bunch of videos, and I appreciate your support. Yeah, Hurl Deep Car, saying that you just joined in. Quick summary. Bank of Canada came out and said they're going to raise interest rates in the future, maybe a little bit earlier, not 2023, mid 2022, but probably not very substantially. They're going to lower their quantitative easing program, only buying $3 billion worth of Canada bonds per week instead of 4, down from the previous 5 even before that. Not much in terms of measures on housing here. Interest rates, I believe, are the greatest determiner of what real estate prices are, and not really any short-term changes. So over the short term, I see real estate continuing on its current tear unless something else crazy happens. But there's a brief summary. Also, again, interest rates affect the government of Canada's ability to implement programs because obviously they have to service their debt at a certain interest rate. If interest rates go up, it becomes more expensive for Canada to have the debt that it currently does. That's sort of just a broad level for you. Malco says, "What do I think of ETF or of ETH? What do you think of Ethereum will be the same as Bitcoin?" Well, I think that they're definitely different cryptocurrencies. I think that they're largely tied together in terms of consumer sentiment and pricing, right? Generally, you see them trade along the same price. When Bitcoin goes down, generally you see Ethereum go down. Not always, but that's what we've been seeing lately. I think Ethereum is a lot more practical as of a currency that you can use, right? Bitcoin has these huge block times, 15 minutes to do a transaction. Ethereum's a little shorter. Also, Ethereum has smart contracts. So I'm actually a little bit more like my thesis for Bitcoin is that it's going to do well because it's the brand name, right? You have so much adoption of it already. You think about like in the future when people who are older start getting into Bitcoin and start saying, "Hey, okay, yeah, I actually see it now." Well, what are they going to go to, right? Are they going to go to a coin they haven't heard as much of, or are they going to go to Bitcoin, the one that's probably going to be the most stable of all of the coins at that point because of its large market cap? I think that that's why Bitcoin could do well, just because of the name value. Everyone knows Bitcoin, but Ethereum is very interesting because of its actual functionality and the way it can use smart contracts and how you can sort of build a layer of services and different businesses on top of that smart contract. Like that's why Ethereum is largely used in the NFT space, something that's been kind of trendy as of late. But there's a lot more ability to create programs that run on the Ethereum network. So that's why I invest in Ethereum, and I have more Ethereum than I do Bitcoin right now, and that's what I think of it. Also, Cardano could be a competitor to Ethereum, especially in those less developed countries, right? Ethereum or Cardano really wants to go into those places and provide a currency that's functional and allows lending, right, to grow those economies. They think it could be really good from a humanitarian point of view. Yeah, John, I wonder if they're going to bring that stuff like New Zealand did. The policies on buying properties. Not sure if you have seen what they put in place. Yeah, I believe they changed it so the bank, or the Reserve Bank of New Zealand, I think it's called. I actually made a video on this a while ago. The Reserve Bank of New Zealand is now mandated to consider housing prices in its policy, right? That can have a big impact if they see that running away. Also, I believe they were going to tighten mortgage requirements for investors. Yeah, it'll be interesting to see if that actually does anything. But yeah, I wonder if Canada's going to implement that. No indication of anything like that at this point, though. Yeah, BTC is a store of value, not a currency. That's definitely what happened with that fork, right? It's not used as a currency; it's a store of value. Think of it as gold 2.0. That's generally the narrative around Bitcoin right now. Yeah, for sure. For sure. And people say, how can it be a store of value, right? How can it be a store of value if you see this fluctuation in price so on an extreme level? Well, I don't believe that in the long term. Later, like the crashes are getting, in my eyes, smaller and smaller over time, and I think we're going to see a stability, and it's going to start looking a little bit more like a gold 2.0, like a relatively stable store of value that sort of hedges against inflation in other currencies like gold does. Oh, Kelly, thank you so much for the super chat. I appreciate that. Everyone give Kelly some love in the chat. I love seeing you here on the stream. Kelly, thank you so much. Chat, show Kelly some love. I appreciate it. I heard Walmart bought 1 billion of Bitcoin. I didn't hear that, but that's interesting. I know Tesla definitely bought a huge amount of Bitcoin. So that's interesting. There's a little bit of a stake in Bitcoin there as well when you buy a Tesla stock. All right. We see, okay, their jobs in the telecom industry are more older employees retire. Yeah, maybe we're going to see a turnover here as more people retire. Kelly says, I have a question about the Alberta relaunch grants. I applied on March 31st and have not received a deposit or info. I realize this is not your topic today and respect how is the best way to contact you. Well, Kelly, I mean, this is an okay way to contact me. I mean, I need to do a little more looking into the Alberta relaunch grants. I'm not super familiar with them, especially given how crazy the news has been lately with the budget and with this announcement, and I'm working through all of that budget document. So I'm not the most brushed up on that. I don't know if there's a contact that you can call to get more information on that, but I certainly don't have any insider information on when those deposits would go out. People are talking about that for the $20,000 Ontario business grant too. I wish I could be of more help to you there, Kelly. Yeah. Oh yes, Steph, you're right. Larger down payments in New Zealand. Yeah, you're right. That did have a big impact, didn't it? Well, I wonder. I haven't really checked in since I made the video about a month ago. Have prices dramatically changed in New Zealand, or has it sort of been trading sideways? Yeah, thanks, Kelly, for tuning in. Musk tweets sure drive Doge. Yeah, I mean, certainly, it certainly does. I wonder what the future of Dogecoin is going to be. I personally don't hold any. Like, it's seen as like a meme coin, but it also could have some functionality. You have, I think, like, what is it, 5-minute blocks, right? So you can do a transaction in 5 minutes or 1 minute or something like that. But I don't know. I mean, lots of people are using it as a marketing tool right now, saying, "Hey, we are accepting Dogecoin. Here's a." Everyone come give us more traffic on our website." I really don't know as much about that to talk about it in an informed way, though. If Canada implements the stricter requirements to buy, I hope new home buyers in Canada are exempt. Yeah, I mean, this is the thing, right? I think that home ownership is such a way that people can boost their wealth if done in the right way, right? People say a home isn't a good investment. In most cases, when people just buy it for their residential home and they're house poor for the entirety of their lives, it's not a good investment, right? But if you implement things like house hacking and are able to sort of rent out portions of your property and make a little bit of income from it, well, then I think it's a good idea. And I think it really can build your wealth because of how leveraged you can be into it, the appreciation, but also the depreciation if that happens. Like if there's a crash, your leverage is a larger loss, right? People talk about this, but I think that home ownership is a powerful tool, and it certainly has helped out the older generations in growing their wealth over the years. And many people are just retiring on on the fact that they have full equity of their home and they can pull out money from it with a cash out refinance, right? That's how people are living right now. It's not going to be the way that people live as of right now, but I really hope that everyone watching this can make the efforts that they can to get into the housing market at some point in a safe way. Again, using these rental strategies that can help you do this in a safe way. So even if you lose your job, you're not going to lose your home. I really think it's a powerful tool. On a real estate issue, Kelly says, on a real estate issue, I'm an executor of a small estate. I'm doing extensive renos and plan to list. It is in a small village 1 hour outside of Calgary. I don't have too much info on the Alberta market. I know things are heating up across the country, and certainly Calgary was a little bit slower there for a while, but I believe it's heating up. I mean, in terms of the renovations, do the renos that are going to give you your biggest bang for your buck when you sell. The cosmetic things, I'm certainly not saying put lipstick on a pig, but go in there and do the cosmetic renovations, the absolutely necessary structural things, yes, but really the cosmetic things, your kitchens, your bathrooms, your paint, your trim, your floors, these are the low cost things that you can do to dramatically increase the value of it. So if you're looking to get the most out of it, if you're looking to get the most bang for your buck on the renos, that's what I'd recommend. In terms of listing it, make sure that it's clean, nice, staged, good photography. Make sure your realtor's taking care of that stuff for you, because that does have a big impact and make sure you list it below where you think it should actually sell for, right? I work with sellers, and I'm always explaining to them, hey, the thing that will actually change what you get for the property is the amount of eyeballs on it, right? List price doesn't mean anything. If you can get more eyeballs on a property, more buyers interested in it, well, that's going to increase the price that you're actually going to get, right? So by listing below where you think it's actually going to go for, or sometimes significantly lower, you can get a lot more eyeballs on. That's why people see these like, oh, it sold for $250,000 over asking. Well, what was the list price, right? Over asking doesn't really mean anything, right? When you have list price flexibility there. Yeah, so interesting stuff there. So just had a call there. Nothing I'm going to look at right now immediately, but yeah, new siding. Sometimes curb appeal can be important. Russell, is income tax reform possible or a fallacy? I mean, it could be possible, right? It depends on the whims of the current government to put it in. Income tax came in during the war as a temporary measure. It's just stuck around ever since. So it is a political thing, but I don't see there being large support for less income tax in the future with how much spending and how much debt we have, and the ideas that we need to use our tax dollars to fund that. Yeah. Well, with all that said, you guys, thank you so much for tuning in. I think we're going to call the stream there. I hope that the video helped you out at least a little bit. I'll do a quick plug again. I made a course that I'm going to be adding to over the years if you're interested in it. It's the cheapest it's ever going to be right now. All the things you should have been taught about money in high school. Take a look at the link in the description, 50% off with code LAUNCH. If it seems like a good fit for you, I'll see you in there. But if not, that's totally cool too. I want to say thank you to everyone for tuning in here. So much fun to get to know you. I'm seeing lots of familiar faces in the chat. It's great to see it. Thanks for the super chat from Kelly. That's so nice of you. And thanks to everyone who's just tuned in and has liked this video and has been supporting this channel. I think we're creating a channel here that is going to be beneficial for Canadians over the long term, and I really appreciate your support in doing that. And I'll give you the classic YouTube outro. I don't even need my headphones anymore. I haven't been listening to anything in like an hour, but with all that said, thank you so much for watching, everybody. I really hope this live stream has helped you out at least a little bit, and I'll see you guys next time. Hopefully we'll get more information next time, see if they're going to do anything about the market. All right, we'll see you guys later. Have a good one. Happy Wednesday.